door.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it. He finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
People from all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
Welcome to the
Rollup
Tokenization
TV,
Tower.
live from the Empire State Building.
Day 3. Yes,
We've
sir.
got a special guest opening the show with us today.
The home of the Nest, the creator of the Nest and the Tokenization Tower, the guy that came up with the idea of the term Tokenization Tower, Teddy from Plume. Let's give him a round of applause. Let's give him some love, Teddy.
Wow, guys. Wow. Thanks for having me on today, man. This is fucking lit.
Let's go, man. Let's go.
The bang.
Let's go.
Man, we got, obviously you're here. You're part of the inspiration for all of this. The Nest is a kudos to Plume. I mean, man, what is it like coming into work every day at the Empire State Building?
First of all, I want to say thanks for you guys coming in here and bringing some life back to the office. We've been here for the last 7 or 8 months. There's a few of us in here, but there's nothing better than having your guys' energy in here every day and having different speakers, different, participants of the show coming on. But I mean, we're super stoked about the Nest. I think, at least on the Plume side, we have a bunch of exciting announcements coming out, whether it's on the regulatory side, on the BD side, on the growth side of things. And so being able to kind of share that news through you guys and work with you guys on a bunch of content and basically work with you guys on a bunch of different strategies in New York as well, it's going to be an absolute banger.
Well, we couldn't have done it without you.
Yeah, man. I've been telling you, we are aligned on a thesis, right? This neo-finance thesis is really just this convergence between digital assets and finance happening at light speed right now. It's happening in New York. It's really clear that New York's become like the capital. It's become the place to be. There's obviously a lot of worldwide global events ongoing right now. We are blessed to be safe, to be here in New York. But talk to us about kind of this convergence from Plume's perspective, right? Like, what does this evolution look like from your purview? You're speaking to institutions, allocators, asset managers on a day-to-day basis. What is their perspective? What does this mean for the industry?
Yeah, no, that's a good question. I think from our side, there's a lot of things going on, but I think at the crux of it, everyone's trying to find a way to move into RWAs to make more money nowadays. In the DeFi space, with the way the markets are trending, yields are pretty compressed. So right now, this is truly our time to shine. We have a bunch of folks messaging us to get access to our institutional grade assets like Apollo, Wisdom Tree, a lot of our partners with Superstate as well. And the big thing that we're seeing is that these folks that we're working with, they want distribution. So the supply side wants to meet the buy side. And what we're seeing right now is a lot of the capital flight is actually in Asia coming into US institutional grade assets. So I think what we do well is really lining up a bunch of assets that capital in Asia can kind of invest into and really make this work within DeFi, alone. Because, before we built Nest, also, I love that this is also called the Nest.
Yes, sir.
And the Rollup. But before Nest existed, this wasn't really possible. Permissionlessly deploying RWA assets throughout an ecosystem, having one of your Nest collateral tokens used within DeFi to borrow against and swap against and even stake within RWAs in general just wasn't truly a thing before we really built this DeFi ecosystem around RWAs as a whole.
We've heard a lot about like institutional looping and RWA staking and these sorts of things.
Yeah.
Also the idea of high quality assets, both speculative and cash instruments with some yield ending up in DeFi vaults and this kind of thing. We've heard a lot about that. What does that actually look like in practice?
Yeah,
it's like vault season.
It is vault
season.
season.
It really is. Everyone's talking about this.
Yeah, and so you see this, from first principles. Is this basically like deposit into a thing like an Aave or a Uniswap LP, like things that we're accustomed to in the DeFi world? Does it look different when it comes to an institutional scale?
Yeah.
How does this look like in practice?
Yeah, I mean, in practice, what it looks like is kind of what you just mentioned, right? You would deposit into an RWA vault, get an LP token out, collateralize it on a lending protocol, borrow more stables against it, and deposit into different RWA vaults that's provided on chain. Whether it's like with Nest, for example, there's a vault for Apollo assets, a vault for Wisdom Tree assets, a vault for Superstate assets as well. But the honest truth is, this stuff is still really, really early for our entire industry. I think people are still trying to find ways to crack this. On the liquidity side, there's issues with redemptions. And just understanding of RWAs from my perspective and from what we've been seeing from the Plume side of things, it's still pretty early. It's pretty nascent. So I think what we want to do is actually provide people with the tooling and the educational materials to actually understand what's going on. Because I think everyone understands how to loop stable coins, right? Everyone understands DeFi. But for some reason, when it comes to RWAs, which is pretty funny because it's backed by the largest institutions in the world,
right?
People get kind of scared at first, right? They're like, okay, so where's my money going? Is it being bridged off chain? What's actually going on? But I think as an industry, we need to educate folks more on what's actually happening with this flow because it's probably the safest flow there is in crypto right now. And RWAs have really taken the spotlight over the last few months. And this is the main main subject and point of conversation for everyone around the world.
Yeah, man. I mean, the one thing that is super compelling and interesting that I've seen from both you and your co-founder, Chris, is this idea of don't let the institutional funds dump on you.
Yeah, exactly.
Don't let
I
them
said that
dump.
in Hong Kong on stage, and everyone's like, "Oh, whoa."
Don't let them dump their RWAs on you. So
Yep.
for those watching who are interested in RWA looping, doing these strategies on chain, what does that even mean? Like we're seeing cracks in private credit.
Right.
We're seeing this kind of shift in the way that institutions are allocating their capital. What does it mean to not let institutions dump on you with their RWA?
Have the idea that these are high quality assets. So like,
Exactly.
wouldn't we want these dumped on us if they're high quality? But that's not
Yeah.
necessarily the case.
Yeah, exactly. So one thing we do well is actually providing the disclosures and the information for people to actually try to understand when they're investing into these assets. What I meant on stage at Consensus when I said the institutions are here to dump on retail is more so in the sense that, there's a lot of different TradFi products being introduced to the crypto markets right now, and it's not super clear to folks on, how these products actually work. Private credit, treasuries, CLOs, all these products become pretty complex under the hood. And so from what we're seeing, and Andy, you mentioned this whole thing with private credit. Yes, there is, for certain products that we're seeing, for example, there could be a headline number, like this product could offer like 5 or 7% APY, but under the hood, the NAV of the product could be moving pretty aggressively given what's going on in the market right now, whether it's macro, whether it's related to tech or AI. So when I said that on stage in Hong Kong, what I really meant was, people really need to be aware of what they're investing in, and that's kind of where we kind of help bridge the gap, because we're providing the tools needed so that when someone invests into a specific institutional fund, they're getting all of their principal plus interest back. And if they're not, then they actually understand what's going on. But I think the institutions are coming in, right, and really just offering these suite of products to people and not saying much in the beginning. So like we're kind of that middle layer to help people really strike this balance.
So today, JP Morgan marked down loan portfolios of PVT credit groups. There were specific private credit loans being used as collateral. More specifically, they're actually marking down software loans. The SaaS apocalypse is ongoing. People are saying that this is the early kind of signs of a weakening economy, of cracks in the private credit structure. How does this affect on-chain RWAs? What's your take on this? What's happening in the private credit market right now?
That's a good point. I mean, I think what happened with Blue Owl, with BlackRock recently too. There's been a lot of attention on private credit. I think that this kind of goes back to what I was saying with with institutions coming into the space. Private credit as a whole, I think it's been a great product over the last few decades, but now people are starting to see that without the right market conditions and cracks in the credit space, there are issues sometimes when you want to redeem and get your money out, right? And so, these gating factors, these different, limits on how much money basically you can take out of different funds, it's not super clear to folks, right? And given that AI is having its craze right now in the markets, whether it's like positive or negative, it's creating a lot of rippling effects, and a lot of PE funds are pretty exposed to tech in general. And so there is like a lot of, I guess, downward implications there, but what we're seeing, at least on chain at Plume, is there still is interest, I think, on private credit. We're still educating folks on what makes sense and what doesn't, but it's definitely, I feel like, even though it's bad news for the private credit space as a whole, at least it's bringing light to the asset class, and people are actually understanding like, okay, like, this is something that could be good in this scenario or bad in this scenario, but at least I'm more aware of it now. And like, I'm sure no one really understood or even knew of the name like Blue Owl before any of this happened, right?
Well, I mean, this news just hit the wire after JP Morgan had a ton of layoffs as well.
Yeah.
They announced that. I mean, we've seen Prime Video announce layoffs, a lot of kind of AI-related layoffs. So we'll see where this ends up. Teddy, just kind of closing thoughts here on the Nest, what you want to see from the roll-up, from the industry in this evolution. Just talk to us about what this is to you.
Yeah, of course. I mean, I think, Andy, you and Robbie, you guys have really set the tone over the last few months on crypto Twitter. And I love that we're building this, more TradFi type media outlet for folks to really get information to what's going on in RWAs. I think education right now in this space is super important. And you guys are probably, the best at pushing out content, naming the neo-finance term and building out this entire segment. it's a lot. And, you know, I see you guys grinding every day in the office with me as well. So we're super excited to be pushing this out with you guys. But yes, I think, you know, the Nest as a whole will be a great place for us to share a lot of updates from the Plume side. And we're working with a bunch of partners so we can get our partners in here. You guys have a bunch of partners. So it'll be the best place right now for anyone to get information on anything tokenization related. So I'm super stoked.
Let's go.
Chris is super stoked. Our entire team is super stoked about this. So thanks for having me on the show today.
Absolutely.
Let's go.
Thank you, man.
Awesome.
Guys, Teddy Pornprinya, the co-founder of Plume. Guys, we're going to be right back, and we're going to get the show started today. Thanks, Teddy.
Thanks, guys. Appreciate it.
man.
Alrighty, guys, we're back. Teddy came in with the air horn, with the firing. Absolutely, guys, like it's fucking lit. RWAs.
Teddy's a legend. Look, man, I think there's a lot that is going to have to be done in order to like actually make these two worlds connect.
Yeah.
And Teddy's one guy that's actually doing a great
They're
job.
doing it.
Eric
They're
here
doing it.
yesterday was also doing a great job. I mean, Canton's doing incredible things. Plume is doing great things.
Yep.
These guys are building the connections between these two worlds that is how these two worlds are going to collide.
Yep.
Otherwise, it's just a free for all, and we've lived in that reality for too long.
All right, guys, today's topics. We got the next day 3, markets and weather. It's a green day today. It's not as warm. The boys aren't sweating so bad. Getting some AC up in this room. Timeline reactions and news. Plume co-founder joined the show. Litecoin creator joins the show. And then Vivek from Etherealize joins the show. Guys, this is powered by Trezor, one of the best hardware wallets on the market, guys. If you guys aren't using a Trezor, just secure your self-custody crypto assets. What are you doing? And yeah, looking forward to today's show. Before we get into the markets and weather, we're gonna tell you about Frax. Frax is the leading stable coin with the future of digital money, open, stable, borderless, FRX USD. Check them out at frax.com. Guys, like I said, it's a beautiful day today, isn't it, Rob? It's 68. I mean, this is not March weather in New York, Rob.
Beautiful.
I mean, come on. I got a perfect view of the One World Trade. Statue of Liberty is looking up today.
Yeah, I mean, we had some great meetings with some of our New York City friends come in yesterday.
Yep.
From around the city. Everyone's got offices here. I saw you sent an article in one of our groups about New York City being the center of this industry now.
Certainly is now.
And
Certainly is.
I think it's just indicative that New York has been the center of finance. It's always been the center of finance, and now this industry is the next evolution of finance. So it's no surprise that we have the center of this industry here in New York City.
Yep. And shout out to Relay, powered by Relay Tokenization Tower. Weather 68 degrees, sunny, a little bit of wind. Relay's powering those cross-chain swaps, no matter what the environment is out there today, guys.
Not too much wind out there. The wind is like coming from this fan we have in the corner.
All right, guys, that's the weather for today. Looking at the markets, for some reason we got red on the screen. I was seeing more green.
Well,
if you're holding Hyperliquid,
that's 'cause we don't have Hyperliquid on this
you're
list
green
right
today.
here.
I think we're up about 7-8% on Hyperliquid today. Again, guys, in our first episode, the regime shift, we talked about perps, stablecoins, tokenization, vaults. The big winners here, I put in my journal and Telegram today. I just wrote a quick text. Hype and Sky, both absolutely leading the market in the NeoFi index. Morpho, Centrifuge had a big run on a Korea run. Bitcoin's down a bit, but we're above 70, so I think it's a good day in crypto land. Chainlink had a nice bounce near. So yeah, man.
And remember, the regime shift is also a progression, right? And so on this timeline, we have the tokenization of these high quality assets happening right now.
Yep.
Teddy from Plume just came in. He was talking about exactly this.
Yep.
Soon enough, these things will be, I think we're going to end up with non-speculative assets, treasuries, repo markets, these sorts of things, eclipsing the amount of speculative assets on chain very, very soon, within a matter of a couple years. Those are going to be the primary assets in DeFi. Then we're going to have those DeFi products structured into vaults, and from there, there's quite a bit more that can come as a result of managing those assets.
Yeah, we had Pranav from Vanek on the pod last year, who mentioned that he thinks this next kind of cycle, if you will, is going to be led by on-chain IPOs. And then earlier this year, we had Santiago on the show, and he talked to us about how he thinks, like, one of his big predictions was that this year, some of the largest tokens, or into next year, are going to be from these external brands, right? So, I mean, the closest thing that I can come up with is OnlyFans, or a Stripe.
Interesting
right?
example there, Andy.
If Stripe decided to do a token, right, as part of their on-chain IPO or a tokenized version of their equity, it's really what you're saying. And we see figures. HELOC is number 10 or 12 in the total market cap. Expect to see more of this, but on the show, we're still kind of focused on the investable assets in the digital asset space.
Yeah.
And those will kind of be a part of that. But
Figure is a public company, but they are also looking at launching their tokenized form of equity. So we're going to see that much more over the coming months. And we're going to start to see what it means for a coin and a token to be paired with an equity. Like we're starting to see clarity come out of the regulatory regime as a part of the shift. We're going to be in DC next week talking to a lot of these politicians and these regulators, and they are coming with their bear spray. If you think that bears are going to remain solvent after clarity gets enacted, after some of the things that we're hearing, if you're a bear, you better watch out for the bear spray.
Hyperliquid bears are getting absolutely mogged. Let me get an air horn over there. Burr, burr, burr. Hyperliquid bears are getting mogged. Absolutely getting mogged.
The Clarity Act is literally bear spray for our industry.
Hey, just wait till we get our boy Itan on the cam, little intern shot. It's coming, guys. Stay tuned. He's mogging on the culture. He's telling us about meme coin runners. I'm not really on deck screener much anymore, but he is. We're gonna get him on the show, guys. We're gonna move on. Shout out to Zama powering our digital assets, markets, prices. Before we get to the news today, let me tell you a bit about Near.
I was hoping that you would tell us a bit more about Near.
Near.ai, Iron Claw, the open claw alternative.
Yes.
The blockchain for
Iron
AI.
Claw, the blockchain for AI, the blockchain before there was blockchains. AI first company into blockchain, built out an entire L1 as almost a side quest. Agents need a place to conduct commerce.
Yes, sir. And Ilya being the co-creator of Transformers, shout out to Near. All right, guys. A lot has happened in the news for the last 24 hours. We're going to do some education here, and then we're going to get into the news. Binance is suing Wall Street Journal. There has been other kind of like private credit cracks that we talked about with Teddy. But first, let's talk about what's on the screen here with 4 pillars on the tokenization side. First of all, shout out to 4 pillars. You guys are doing great work. We love covering your content. We really thoroughly enjoy it. You guys are doing great research, a lot of awesome coverage in Korea. We'd love to have you guys on the show, do an event here in the Nest. So let's talk about tokenized stocks framework, global case studies.
I mean, tokenized stocks and equities are an example of the speculative high quality assets, but we do believe that US equities are one of the most high quality asset classes in the world, along with the rest of the global stock market. This is the speculative category after the non-speculative stablecoins, tokenized treasuries, and repos. We had Eric on here yesterday talking about payroll. Examples of non-speculative, but tokenized stocks are something that is getting increasingly more popular. You and I were having dinner 2 nights ago. We walked by the New York Stock Exchange.
Yes, sir, we did.
And literally, it's a very impressive building. It takes up a lot of space in the financial district of Manhattan.
Yeah.
And they decided to put it on a blockchain.
Rob CC says that the new L1 trade is the NYSE is going to be launching it in L1, getting retail zero exposure to it. Sounds like a lot of these new corpo chains as well. So guys, 2026 theme here from 4 pillars. Tokenized stocks are emerging as the next major RWA category after stablecoins and tokenized treasuries. That's somewhat obvious, but why, right? Last year we got a lot of regulatory clarity. We've seen Figure take a leap here, but what I think is very important is that we actually get this line in the sand with Clarity Act done. There's rising institutional crypto adoption, deeper TradFi interest in on-chain finance. And look, global equities are $140 trillion. We talked about this with Eric yesterday, right, Rob? I mean, we saw if we can get a little bit of bips of the total market one by one, the TAM is massive. And so
look, I talked to this. I talked about this with Joe Lubin on our fireside in Denver. He is working directly with the DTCC, talking about how they can potentially tokenize all of the physical stock certificates that are currently in paper in a vault underground with the DTCC. If you aren't aware, the DTCC does exactly this. They settle on the order of quadrillions in volume, right? And so their market capitalization is not in the quadrillions. There's no quadrillion-dollar companies, but they take a few bips on all of that settlement volume. And so think about what the world looks like if Joe Lubin is talking about tokenizing those physical stock certificates. They're on the order of quadrillions. Where is he going to tokenize it? It's going to be Ethereum.
It's going to be Ethereum. And we're going to talk to Vivek about that today. That is the one note that Ethereum has won, even though all this ETH kind of bearishness. If you're trying to build a business around stablecoins, around RWAs, you're probably going to start with Ethereum and EVM. Obviously, Plume has a blockchain, Plasma, Tempo, Arc are coming out, et cetera, et cetera. But this is kind of like the home for the developer sandbox and more. a bit more on the legislative and regulatory action here. The core problem with traditional stock markets, right? They're slow, costly, intermediate, heavy. They have T+1, T+2 settlement, right? There's limited hours, indirect ownership. As we talked about in the first episode, Hyperliquid is going to bring 24/7 tokenized commodity trading to the masses one way or another. Like, it's going to keep hitting Bloomberg headlines. This is happening, guys. And
I was thinking yesterday, actually, you know, price discovery is a very important commodity. Price discovery is happening on Hyperliquid. We're going to see more and more venues compete for 24/7 trading because they're not going to be happy about Hyperliquid owning this share of the market. I like to think about the Rollup as almost like the information price discovery where it happens.
Yeah.
And so I think this is first mover advantage to Hyperliquid. We're going to see a lot more companies take flight.
I agree. All right, guys, let's scroll down a bit because I think this is an important educational moment for tokenization at large, right? Like, right now, you hear a lot of tokenization conversation, and there's really four main models of tokenization that I think are important to understand. So if we keep going down, you'll see kind of like how these models look. So we're scrolling through a lot of the kind of stable coins, US treasuries. We just covered a lot of this.
And then we start with the non-speculative assets because these are the foundation of cash.
Correct.
Then we move into the speculative.
So, we talked about how the stock market works. We talked about kind of what that looks like. But I think the key thing in this article is the four main models of tokenization, guys. So let's talk through them, all right? We've got direct tokenization. Direct tokenization tokenizes the stock itself and gives the users full rights, right? So this means that you have the full claim on cash flows, whatever the governance rights are. You have the fiduciary duty from the company to effectively enrich their shareholders, to provide shareholder value, right? So that's the first model.
I want to be clear. We're saying this is the first model, but this is the most difficult model to get to because it takes untangling and reshaping the entire cap table of the company. So we're going to kind of go backwards here in terms of how much fiduciary rights the end shareholder has. But obviously direct tokenization is sort of the end state, the end game of tokenization as these things get fully integrated.
If we get the behind the scenes shot, we can see the four types of models here on the big screen. And basically what we have is a direct tokenization, entitlement tokenization, indirect tokenization, and perpetual futures. And so we're going to talk about each of those four models. I talked about the direct one, Rob. You said how hard it is to actually get that done.
Yeah.
Entitlement tokenization, I think, is closer to where we currently are. So this tokenized rights within an existing market infrastructure, right? And so basically we're actually able to have the tokenization of the rights of owning a specific equity within that existing market infrastructure, right? So this means that basically you have these rights, but it's kind of limited on the location of where these assets are held or how they can be kind of like utilized. But again, you still get more rights than the kind of current form that we're seeing, which is the indirect tokenization. So this just gives users economic exposure, but not true stock ownership. So a lot of what you guys are seeing on chain right now is this. And this is really important to understand because when you buy a Ondo tokenized equity or an X stock, you are buying the economic exposure or basically the delta or the beta of the asset, right? But you are not getting any of the stock ownership. And that is a lot of what the common tokenization platforms are doing today.
Right, because it's easy, right? And so the proposition here is that on-chain users want exposure to high-quality assets.
Yeah.
The quickest path to market is to give them exposure to something that is not direct tokenized. And so they're giving users indirect tokenization because that will facilitate a quicker path to market. We're seeing Ondo and Denari and Bakkt and Robinhood offer these sorts of assets. And then ultimately, the goal is that these are a stepping stone to more direct tokenization. But because it's so difficult to unwire and rewire all of the cap tables of public companies, that is something that's going to take a lot of time. It's going to take some regulatory clarity as well.
Yeah.
So we're going to see that play out over time. Obviously, Securitize and Superstate are shooting for that end game direct tokenization. Then we have players like Denari and Ondo that are moving quicker to market. So they're going to have a first mover advantage, and we're going to see how this shakes out over time. I do want to be clear about something and how this current stock market works, which is that most of the stock certificates, when you're just buying on a brokerage like Schwab or Interactive Brokers or anything like this, you don't actually own the stock. That's the purpose of the DTCC.
Yeah.
So even in the current, architecture of the stock market, it still resembles more the indirect or the entitlement tokenization path. It's just happening in a more traditional format. You don't get shipped the physical stock certificate anymore. That's what represents the actual stock in the company, right?
Course.
If you own that, you would directly own, like the direct tokenization, you own the asset physically in your own hands. But instead, we have these brokers, they custody the assets, and then they pass exposure along to the buyers. So it is still entitlement or indirect purchasing of equities, even in the current landscape, even before we talk about tokenizing anything.
Yeah. I mean, then the last one here, Rob, is perps.
Is perps, obviously,
right?
yes.
And so you raise a funny point about kind of operating within a brokerage.
Yeah.
You don't actually own the stock in the same way that, back in the day, you would get the stock certificate on the phone in the New York Stock Exchange. Literally, you'd go there, do the call, do the swap. Now we have perps.
You're trading with the pieces of paper in the air. So you're on the phone with one hand, you got the piece of paper in the other hand.
Now we're on perps. Now we've speed run that all the way into crypto with Arthur Hayes' invention of perps. This just tracks price. You literally own nothing. It's most akin to a traditional future in the stock market. And so, look, guys, I mean, just to close this loop here, wanted to spend some time educating on this because I think it's something that, again, is not really covered enough. Is right now we are operating within a lens of entitlement tokenization and indirect tokenization, as well as perpetual futures. As you guys see on the screen, Superstates and Securitize are pushing very hard on direct tokenization. And we think that the best structural fit as well is direct tokenization. So we agree with 4 pillars here.
In due time, I think we've got a lot of prerequisites to get there. Companies like Denari and Ondo are still doing good work in bringing these assets to the people that want to get exposure to the upside of these assets. Like we, for so long, have had
perps as well, obviously.
And obviously perps as well. And Hyperliquid's doing a great job of this. We've just had this era of low quality assets that were the only things that we could get exposure to on chain. And so you do have meme coin runners that people, get into for, gambling purposes. And
Taking
then they
back
dump.
to DeFi summer, boys.
And so we're seeing
Yams.
the asset landscape on chain. We're seeing it mature in real time.
Yeah. So, guys, that's our tokenization and education segment of the day, powered by the Rollup. See you guys later. All right, guys, let's get to the next one. Bit of an Oracle incident, if I recall correctly. So there was a misconfiguration of a capo Oracle for wrap staked ETH and a staked ETH pair, so an LP, which caused an artificially low price cap and triggered unintended E mode liquidation. So on Aave, there is this E mode, which basically, if you have it turned on, when your collateral and your debt assets are effectively the same type of asset, right? So stable coins, like if you're depositing USDT, borrowing USDC.
In this case, it was supplying some ETH, and it was borrowing some wrapped ETH,
exactly,
staked ETH, wrapped ETH. Yeah.
So they should theoretically have the same price, or at least those assets should track each other in the same way. And so what Aave allows you to do is actually to borrow, I think about like a 95% or 99% LTV.
Exactly. Much higher LTV requirements when you're in E mode because these assets track one another.
And so on March 10th, there was 345 ETH in losses. However, no bad debt was created. And basically, there was a smart contract that used inconsistent constraints. An old 2024 snapshot ratio with a recent timestamp reference pushed the cap below real market rates.
Yeah.
Basically, it was limited to 3% growth over 3 days. And
so
you had this faulty...
Right. So the Aave CAPO is a correlated asset price oracle. It aims to prevent a well-known oracle exploit involving an artificially inflated exchange rate. Obviously, because these things are in E mode, or they're supposed to be in E mode, they would track each other more closely. The reason no bad debt was created is because there was over aggressive liquidations. The creation of bad debt is a result of under aggressive liquidations. And so this made the protocol safe, but obviously this was not the intended result here. And so Chaos Labs, and we've had Omar on several times, Chaos Labs is working closely with Aave. They do a lot of the risk management here. And so they are working to resolve this 345 ETH loss.
Yeah. All affected users will be fully reimbursed, and about 141 ETH has already been recovered. Look, guys, I mean, this is still the state of affairs in DeFi. We're still very excited about the promise of DeFi and about what it provides. But frankly, there's still these intricate technical things that happen, just these events. And there's no other way to describe it than we're bringing on innovative new financial primitives, right? The ability to loop assets that are yield generating at scale, in size, with super high LTVs. And so that's something that is not currently really possible outside of being on chain on Aave. And so here we are.
The one thing that happens off chain quite a bit is human error. So think about all of the interns that have, made a wrong phone call. They've, pushed this button instead of that button. These sorts of things happen. We're just seeing them play out in real time, and they're happening in code rather than in, human actions. So mistakes happen. Shout out to these guys. Always, reimbursing, these things is the way to get around them. Not every protocol can do that. This one was relatively contained. Only 345 ETH, but Aave's got a war chest, and Chaos Labs
Only
is a
345.
friend of the show.
All right, guys, we're going to move on. Just wanted to cover that because I thought it was particularly pressing.
Yeah. Next up, we've got DVT. The institutional staking infrastructure standard proposed by the EF. We've learned about DVT for a little while. This is when we were deep into the architecture of blockchains, staking, and this is distributed validator technology. The Ethereum Foundation is proposing to use a DVT Lite solution to stake 72,000 ETH, so quite a bit more than the 340 that we just talked about with Aave. Vitalik says that his hope for this project is that in the process, we can make it maximally easy and one click to do distributed staking for institutions. Obviously we had Eric from Canton in here. He's talking about how super validators want to be part of the network. Similarly enough, actually Canton's model, their architecture is almost like this network of networks model. Actually reminds me a lot of the Ethereum rollup centric roadmap. Obviously we're seeing rollup sort of compress back to the L1 as the L1 scales. But I'd imagine as a lot more institutions they have some more complex and unique use cases between them. Each of these institutions may end up creating their own rollup, sidechain, whatever it is, ultimately maintain composability with Ethereum, but have specific rules that they'll need to maintain in order to maintain compliance and their users' ideal process. Each of them should be staking ETH. Right, I think that is what we're seeing in terms of incentive alignment. Obviously, the big ETH treasury companies like SharpLink and Bitmine have chosen to stake quite a bit of ETH. But then we're also going to see, in my opinion, a lot of institutions come in. There's a lot of ETH bears out there. Can you pass the bear spray?
Of course I can.
This is for anyone hating on ETH, because I think you're underestimating Vitalik. He's in war mode. We're seeing the EF make lots more changes. I think the EF is continuing their bullish ascent after their bullish reversal last fall. And I think the EF is not going anywhere. I think Ethereum is not going anywhere. We have Larry Fink at BlackRock talking about tokenizing every ETF in the next 3 to 12 months, not just their crypto ETFs. Every ETF from BlackRock in the next 3 to 12 months. Matt from Bitwise says this is a foregone conclusion. Institutions don't talk in the matter of months if it's not something that is already past compliance and already a foregone conclusion. And you have Larry Fink talking about one blockchain to rule them all. He's not talking about a BlackRock L1, and he's not talking about some alternative L1 to Ethereum. He's talking about Ethereum, and he's talking about tokenizing every single ETF in the BlackRock portfolio.
I love it, but again, the issue here with the bear spray for Ethereum is that Tom Lee's thesis and this whole thesis around Ethereum is going to be the home of tokenization and stable coins and all the activity is going to happen there.
They're also so much further
there's
ahead on
no-
quantum and AI. I think Near is the only blockchain that is competing with Ethereum when it comes
All
to
right.
agentic finance.
Well, there's just no capture. There's no value capture mechanism for ETH, the asset, other than the burn right now. And it needs revival on the tokenomics side. So this hopefully is the step. The goal is to make distributed institutional staking simple and resilient. And so hopefully that kind of comes through and happens. And it's 72,000 ETH, as you mentioned, Rob. So guys, we've got Charlie Lee joining us today, the Litecoin creator, who is an OG, literally sold at a perfect time in 2017. It was hilarious. It broke crypto Twitter that day, has since just contributed to Litecoin, other open source projects. Honestly, just so interested to hear what the state of this industry is from his perspective. So I'm looking forward to having Charlie on. We got a bit more news to cover as well. Circle, US senators as well. Why don't we get to the Circle news and then come through back to Charlie once he's ready. Rob got fired up about ETH there. And yeah, I think your ETH bags are showing a little bit there. I think my Hyperliquid bags are always showing on this show, but we're up today and we're feeling good.
How's our uranium doing?
Uranium's looking all right. I'm still a little underwater, but I have faith, We're going to need a lot of nuclear for this AI renaissance. We're going to need a lot more power. Guys, Circle launched gas-free USDC nano payments on testnet. This is built on Circle Gateway, enables ultra-small payments for, you guessed it, AI agents, Rob, which is, well, our saving grace in this industry right now, if you ask Crypto Twitter. Are we going to be saved? Yes, we are, but it's going to become the agentic finance world is what we're waiting for. So this eliminates gas fees through off-chain aggregation and batch settlement. It supports multiple networks. And Circle is just really pushing forward on this agentic stablecoin payments, commerce and finance intersection. And frankly, we believe that this is an important thing to be part of the show structure, as well as just guests and teams that we speak to. It's undeniable that teams like Tempo are pushing this idea of we need 1 billion TPS blockchains, right? We need these massively scaled distributed ledgers to be able to actually facilitate the commerce requirements for agents. Do we, or is it a good marketing narrative? I don't know, but it is happening at aggressive speeds right now. And I think undeniably the blockchain activity comprised of agents versus humans, whatever that split is, I would argue it's probably like 99.9% humans today. You can anticipate that slowly but surely bips of that is going to be kind of taken over by agents.
Way less than 99%. I mean, look at sandwich bots, front run bots, all of these, they're not agentic, but they are automatic and bots.
Yeah, automated. Yeah.
And so that's not human, right? That's not a human driven transaction. That's something that's already written.
But I'm
code.
talking like agentic, like operating its own capital.
It's really 3 buckets. You've got human operated transactions. You've got the current bot landscape, which ultimate is quite a bit of the market share when it comes to the transactions pushed through these networks. And then you have agentic, which is extreme, it's certainly on the rise. We're going to see more and more of this. My only thought here is that, we've talked about AI and how there's business opportunities to replace some of the current, business functions with AI. There's, someone's going to come in, they're going to be, a very small company, and they're basically just going to be the handyman that will help you install your AI workflow.
Yeah. Actually, apparently people in SF are charging $6,000 to set up your OpenClaw, which is absolutely nuts. $6,000 to set up your, there are free tutorials online.
Right. So I think that is, kind of a flash in the pan. I think there's going to be some of that, but it's not too defensible. I do think that we're going to see more agents as users, right? So as we think through agents as the primary function that are pushing through transactions to these networks, I think we're going to start to see more user experience built for agents. We had G Money on the show. He's talking about how he built his website so that it's more readable by agents rather than humans. Yep. And we're going to start to see more and more of this. And so I think just, a shout to any kind of builder or entrepreneur in the space. Think about your user and your user experience, but have in mind that within the next few years, your primary target users could be more agents than human users.
Yeah.
And
I agree.
build with that in mind.
And the way that they find websites and operate with smart
SEO,
contracts are different.
yeah.
I was actually on a panel with Sri Ram and Ilya in SF 2-3 weeks ago. And I basically asked Sri Ram if he thinks that building front ends and sexy branded UXs for trading, for DeFi is going to really slow down, because like if you're an agent, you can really just interact with smart contracts directly. Like you don't really need a trading terminal. You don't really need a website to like show you around. You just go direct to smart contract or direct to code and do things in a CLI. And so he gave a very interesting long-winded answer. But essentially he was kind of like, yes, the way that discovery is going to happen on chain is going to change. So,
all right, let's keep it moving, man. AI is taking over the world. Next, we've got U.S. senators. Obviously, clarity top of mind. I think we're going to see a lot more market structure evolve. Senators propose new stablecoin yield compromise. This is something that could potentially keep us moving towards the goal. Again, we're going to hear a lot more about this next week. We're going to be in DC. We've got a great lineup. So we're going to be bringing you guys exactly, straight from the horse's mouth, right from the center of the governance and who is making the decisions when it comes to clarity.
That'll be Tuesday next week.
So the high level here, Senators Angela Alsobrooks and Thorne Tillis are co-leading negotiations on a stablecoin yield compromise. They're targeting late March, right? So this is going to come around the conference and the Digital Asset Summit as well. The Senate Banking Committee markup of the Digital Asset Market Clarity Act after a January postponement. You remember there was a lot of news on this. It got postponed. Now we're targeting later in March. People are really, really pushing to get this done before the midterms, because as we draw closer, senators will start to campaign. Congress people will end up moving back to their own hometowns to further campaign. People are going to get into a much more political mindset. We ultimately grind to a halt. This is the nature of our governance process in the United States. But the proposed framework would permit activity-linked rewards while prohibiting interest on idle stablecoin balances. Right now in the Genius Act, this is the gray area. You can't pay interest, but you can pay rewards. And so what's the difference? You hop in the New York City subway and you see an advertisement for the next neobank that's offering 6.5%, on your deposits. Is that a marketing expense or is that an interest payment?
Yeah.
You're right. That's the question. It's a very gray area. And so we want to prohibit interest, but we want to allow activity-linked rewards. This is kind of where the compromise is. The American Bankers Association, that lobby with a lot of bankers, rejected an earlier White House compromise on March 5th. And Coinbase has withdrawn support for the bill over these restrictions. We all heard about that as well.
Which was pretty controversial, to be honest. People were on Brian Armstrong's side for backing the crypto ethos and for basically standing up for stablecoin issuers, obviously Circle, and just standing up for the space at large. The other side of the argument, people were like, Brian, why did you delay the Clarity Act? The market nuked from 97K to like 66K, I guess. On that news. And so honestly, from my side, I put a tweet out. I was like, look, you gotta stand by Brian. You gotta trust in Brian, trust that he's gonna know what he's doing, that he wants this industry to win. And that obviously there was something as part of that bill that either weren't a part of his personal and private company interests or just the industry interests at large, which in theory, if you believe in the kind of common good of economics, those should all be kind of incentives aligned. And so even that aside, just from a character perspective, I think you got to back Brian on that.
I'd love to hear more about the common good of economics a little later.
It's just like if everyone operates in their own self-interest, then it should create enough opportunity for all. Like a bunch of economically good actors opting to do things that enrich themselves or build their own economic stature creates an environment that there's economic good for all.
We've talked on the show before about this idea of a similar idea, but somewhat different, is like economic karma. So in that reality, if everyone's kind of operating in their own self-interest, very capitalistic in nature, you could believe that, you provide value for others, that value will reciprocally find you as well. Very, a karma approach to the kind of economic value that you're talking about. So that makes a lot of sense.
Yeah.
And then obviously, just on this Clarity Act, the American banks are worried that, there could be capital flight out of the deposits in those banks if stable coins, take off. To me, it's like, you innovate before you get disrupted, right? And so we're seeing Fidelity, launch their stablecoin. Wells Fargo came out just another day or so ago talking about their stablecoin.
Yeah, WFUSD. I mean, there's going to be a lot to talk about in DC, right? Like, there's going to be the Democrats and the Republicans with their kind of differentiated views on Clarity, on the crypto market structure at large. But I mean, the essence of those conversations next week, guys, is going to be around what this looks like what's actually happening behind the scenes, and the intricacies of these bills that aren't just stablecoin yield. There's a lot of conversation right now about just stablecoin yield. I think that's going to evolve as well into conversations about other things in DeFi, other things in trading, other things in custody and DEXs. So we're going to try to get to the bottom of what's happening in DC next week. Tuesday, Wednesday, we'll be live from the DC Blockchain Summit hosted by the Digital Chamber. If you guys are there, Monday night, we're also hosting an event with the Solana Policy Institute and a couple other players there on Monday night. So that should be great as well. I'll probably have to wear a suit and tie. I have my blazers up here. I got my ties out. So hope you're bringing your suit and tie there, Rob.
Planning on it. We're going to see a lot more suits and ties here on the Rollup. Got to play the part. Got to fit the vibe out here in New York City at the center of finance.
Yeah, it does feel good to wear these things in New York.
Not when it's 81 degrees in here. That's our weather forecast for today. If you guys are not aware, the Empire State Building AC is in need of a work order. And so we're working on that. There's still a few tweaks to make around here. Maybe we'll start adding in maybe we'll get a behind the scenes shot. Oh, we're at 81.5. So there's a different kind of weather forecast in here than there is out there.
It's a big work in progress here. People are big believers in progress. We got our bonsai tree today. We got our plant. We got Charlie Lee joining us, guys, in just a second. The creator of Litecoin.
His username on Twitter is literally Satoshi Light.
Satoshi Light. Do you think he is Satoshi? You? There's no way, huh?
We should ask him.
I don't think he's going to take very well to that.
No?
No.
Why is that?
I'm not sure. Do you know what's happening with Litecoin? Because that was one of the first things I ever bought.
Really?
Yeah.
Yeah, I mean, first thing I bought was Bitcoin. Second thing I bought was Monero, because our friend that introduced me to crypto was very interested in Monero at the time. I think third thing I bought was Litecoin.
Yeah. It was like $3 or something, $2.
Yeah. It's still the number 25 by market cap.
I mean, it's the silver to Bitcoin's gold. It's not Ethereum.
There you
guys,
go,
if you guys think Ethereum's digital oil, but if Bitcoin's digital gold, Litecoin is the digital silver.
The bear spray is working.
That's what they told us, at least in 2017.
That was the narrative.
CT kind of, man. 2017 had characters. The industry is so different than 2017 now, man.
It really is.
Like, for better and for worse.
Yeah.
In many ways.
I remember listening to a guy on Twitter named Crypto Coconut.
Yeah.
He had all the great takes.
Great takes.
Yeah, incredible takes. And then, within like 2 months of me getting into crypto, the DAO, which Vitalik says he wants to bring back, we'll see. I mean, that was like a stain on Ethereum's legacy.
Yeah.
That is the reason why.
The DAO hack. Is what he's...
The DAO hack, back in 2016, you guys remember, well, if you were there, I mean, the DAO was like this incredible, it was going to be the DAO of DAOs. You were going to have this thing. It was almost like the protocol guild is what they kind of have now going on with Ethereum, but it was going to be much more than that. So much ETH was going to be allocated to this thing, and then it was going to fund things like the Ethereum Foundation, as well as other DAOs that were going to get spun out, almost like an open source. And then Gitcoin is kind of, all of these have been outgrowth of that same idea. And then it got hacked as soon as it went live. All of the ETH that was in the contract at the time got drained.
Yeah, man,
it was terrible. A large sum of money, even at the time. So what happened was that Ethereum was $7. I first bought Ethereum, it was $7.11. Great number. It went up to $23 ahead of the Dow because everyone was like, wow, this thing was really exciting. It's back when positive, announcements and activations actually made an effect on price.
The bull markets.
$7 to $23. I thought I was a genius. I had bought Bitcoin, I had bought Ethereum, and then as soon as the Dow went live, it went from 23 all the way down to I think it was $5, maybe even less, maybe like $2 or $3. And I had this whiplash effect, and I knew I was never going to escape this industry.
Yeah. The volatility.
And so what happened afterwards was there was this big community conversation about what we do. Now there is a very significant portion. I think it might have been 5 to 15% of Ethereum's total supply at the time got drained from the smart contract and now is in obviously very bad actors' hands. And so it's like, okay, what do we do? Do we just let the Ethereum protocol exist? The protocol is immutable and we just let this bad actor have all of this Ethereum?
Yeah.
Or do we blacklist this Ethereum that this hacker stole?
Do the old fork?
Do the old hard fork. And that's what we did. We took a vote as a community. And everyone who had ETH at the time, what you had to do when you had ETH back in 2016 was you had to run a full node.
Yeah.
And so it wasn't as easy just owning ETH in a wallet. You had to run a full node. That was how you could own ETH. And so you could signal with your full node as far as which way you wanted to vote.
Yeah.
And so the community as a whole, everyone who owned ETH and ran full nodes, voted to blacklist the hackers' ETH and hard fork the chain. That is what created Ethereum Classic, is actually the original Ethereum where the immutable ETH that the hacker stole exists. It's still got a market cap of $1.3 billion. And so that is $1.3 billion of lost value that could have accrued to the ETH protocol.
Yeah. Crazy.
It's a little bit of Ethereum lore for you.
We got Charlie Lee in the back. We're going to bring him up in just a sec. We're going to take a quick commercial break and be right back, guys. See you when we have Charlie up next on the show, live from the Nest in New York. All right, guys, we got Charlie Lee.
Here he is, the creator of Litecoin. Welcome to the show, Charlie.
Hey guys, thanks for having me.
Yeah,
Absolutely.
man.
Thanks for coming on. We were just telling a bit of the old lore from 2016 is when I got involved, and Anley was around in that time too. It's around the time when we met as freshmen in college in the University of Florida Bitcoin Club. So it's our origin story, and you were a bit of a legend back then. Still are.
Thanks. I can't quite hear you, Leo. I think the mic is going in and off for me.
Yeah, no worries, Charlie. Robbie was just saying that we've kind of grown together through the University of Florida Blockchain Club and followed a lot of your early work with Litecoin. Was one of our first investments into the space and just kind of forays at large. And yeah, wanted to bring you on today and just kind of chat about your current perspective on the space. how you're seeing the evolution and growth with Litecoin and more. So I think just kind of starting broadly, kind of a left field question, Charlie. Since you started, the space has gone through a massive cultural change. We're sitting here in the Empire State Building in New York City, and there is a complete evolution of the way the digital assets industry and finance is converging versus kind of when we had Litecoin and crypto Twitter in the early genesis. It was quite different. Did you expect this industry to play out in the way that it has with ETFs, with institutional adoption, with Trump, with all these things? Just give us a sense of what your purview is of the current state of affairs in the crypto industry.
Yeah, well, when I started, this was in 2011. So obviously the industry has grown like tremendously. When I started, it was just Bitcoin, right? And it was viewed as kind of a kind of like toy money, right? Just digital play money. People didn't expect too much from it. Nobody knew where it's headed. Had a lot of potential, but nobody was thinking anything remotely like what we're seeing today, like institutional adoption, ETFs, and such. Just a bunch of kind of geeks and people interested in digital money, right? So it's definitely grown incredibly a lot in this past 14 years.
Yeah, it definitely has. Yeah, I mean, it's just changed so much in a way that is like hard to wrap your head around from that perspective. And I mean, Bitcoin itself is obviously an institutional asset now. Ethereum, Litecoin, Ripple, et cetera, they've really grown. I'm curious kind of what you think about the evolution of TPS and scaling, right? So when it was originally created, Litecoin was this faster, cheaper, better version of the Bitcoin blockchain. And since Ethereum and since the inception of smart contracts, we've just kept seeing this kind of commoditization and just growth of wanting to have faster, better speed, higher, more performant blockchains. How do you see this from your perspective? And what does this kind of show for the evolution of the space at large?
Yeah. Oh, sorry. Yeah. So the thing with blockchain is it's intentionally inefficient, right? So in order to make it decentralized, there's inefficiencies with it, right? There's a trade-off. So of course, a centralized system like Visa, MasterCard, or other payment methods would be a lot more efficient, right? Whereas with a decentralized method like Bitcoin, Litecoin, every transaction has to be broadcasted to every node across the world, and everybody has to double check everything's okay. So that brings inefficiencies, and it causes transactions to be slower and also to cost more, right? Transactions fees. So people have been trying to build more TPS on second layer solutions like Lightning Networks and other things to kind of have a different trade-off, right? A little bit more centralized, but it will be faster and cheaper. So Litecoin has done a really good job at helping Bitcoin kind of handle the decentralized load for all the transactions that need decentralization. And we've seen a lot of people use Litecoin in addition to Bitcoin, right, for lower fees, for cheaper transactions. But in the future, as this grows, we'll need a lot more different solutions like Lightning Network and other second layer solutions to help with transactions.
Yeah. I mean, there's this current ongoing push around agentic finance and what that looks like. And people are claiming that we're going to need 1 billion TPS blockchains. Do you buy into this AI agent hype on chain? What's a contrarian take about AI that you have?
Sorry, about the need of higher TPS?
Yeah, like do you think that this intersection of agents and blockchains is going to happen at scale? Do you buy into this kind of idea of this convergence? Generally, like what's your view?
I think not just AI, right? Just in general, kind of the world's need for doing decentralized transaction will grow over time. So blockchains have to adapt and be able to support that.
Yeah. Charlie, when you first got involved, what was it that stuck out to you about this industry that ultimately back in 2011 struck your interest and gave you the idea to invent Litecoin?
Yeah, when I first got into the space, I was kind of hooked on the idea of a better form of money, right? So we've seen like gold used as money, fiat currencies, obviously, and they're just seeing like fiat currencies being inflated away over time and people kind of losing their money is kind of heartbreaking to me. So seeing something like Bitcoin where the supply is fixed and nobody, no company, government, or individual can inflate the money and cause everyone to everyone's money to devalue over time is something that is very compelling to me. Something that seems like it's a better version of gold. So that's kind of what got me into Bitcoin and cryptocurrencies. And
today, the U.S. has a national debt upwards of $36 trillion. Inflation came in today pretty much as expected, 2.4%. But we are steadily growing into what Ray Dalio is calling this death spiral of a global debt cycle, and we're in the late innings of that. Do you agree with Ray Dalio that we are in the late innings of a global debt spiral? And if so, is it too late to do anything about it, or what should we do about it?
Well, the great thing is with Bitcoin, Litecoin, you can opt out of the system, right? You can hold your wealth in money that is not being devalued over time. So that's a great solution for people, right? And I do think that throughout our history, fiat currencies have never lasted longer than like 200 years, something like that, right? So the US dollar and other fiat currencies currently are getting to that stage. I don't know how much longer it can last, but the end is pretty clear to me. Like, yeah, it's not gonna be pretty. And the best part is you don't have to play this game, right? Because there's a solution now.
Yeah. Do you think that the current state of affairs in digital assets has lost the original ethos that you speak about with regards to an alternative, a plan B? Do you think that the entire industry has been co-opted by institutional folks and capital allocators and speculators who don't really understand the core premise of why blockchain exists and why decentralization is important?
I don't think totally. There's always going to be people speculating in the space, investing in just kind of to make more money, right? And not believing in the what's so powerful about Bitcoin and Litecoin, about the cryptocurrency. But that's fine, right? Because in the end, the system is still here and it still works, right? People can like buy and sell Bitcoin and on Coinbase and never actually send it, never actually touch it. But the great thing is that you can always pull it out and actually store the Bitcoin yourself and use it and spend it, right? So that's the best part is you can always kind of opt out of centralized systems to go back to decentralized.
Yeah, that is one thing that I think people are now going to gold, physical gold. We're seeing more and more central banks. Obviously, Bitcoin is a lightweight version of that. The transferability allows for a lot more commerce to take place. But I guess what am I trying to say? The product market fit of this asset class as use for money hasn't quite taken off. You were there when we had, the block wars, the big blocks versus the little blocks, and Roger Ver and Bitcoin Cash and all these things. What is your interpretation of Satoshi's vision, pun not intended, right? With Craig Wright and Bitcoin SV, but Bitcoin is a peer-to-peer, cash system, as Satoshi calls it in the white paper. Do you think we took the right path to ultimately achieve fiat replacement currency?
Yeah, I think it has taken quite a bit of time. People are not using it as much as I'd hoped they would, like spending cryptocurrency as real money. Because that's because the incumbent is so strong, right? It's so easy to use, like credit cards, to spend money, that you really have to have a system that is much better, right? Much simpler and much easier, and it's tough to beat. So yeah, I think, but over time, like right now, the store value narrative is winning, right? If you kept your money in Bitcoin, Litecoin, cryptocurrency over the past 10 years, your wealth has not been devalued. If anything, it has gone up, right? So the store value narrative is the first and foremost, like, biggest strength in cryptocurrency right now. The means of payment is yet to come, but I do believe over time people will start to see will will people will start to spend cryptocurrency a lot more than they do today, and whether that's like converting it to stable coins and sending stable coins to merchants or something else, but it will become more and more easy to actually spend, and that's kind of the ultimate goal for money.
Yeah. Charlie, we saw institutions accumulate about 4 million Litecoin over the last year or so. I think there was the LTCC ETF launch as well as some DATs. What does this look like, Charlie? Like when you guys are interfacing with institutional allocators, capital allocators, what does these conversations look like? And what is driving the demand for Litecoin right now from those allocators?
They're seeing Litecoin as an alternative asset class to Bitcoin, right? Something that is that has stood the test of time. Where Litecoin was launched in 2011, and it has the network has stayed up since then, like zero downtime for 14 to close to 15 years, which is kind of unheard of in this space. So given the track record, and also the fact that people are using Litecoin for transactions even more so than Bitcoin, due to the fast transactions and lower speed, that it's a compelling narrative for people to invest in this asset class.
Yeah, yeah. And is the time frame for these allocators, is this like years, decades? What's to stop them from just turning around, losing conviction, and selling?
To be honest, I'm not in the institutional space myself, so I don't know like what exactly they're thinking. But given that Litecoin, kind of the position of Litecoin in this space, I don't see why people would kind of lose interest in it. If anything, Litecoin has become, in terms of payments, has become like more and more used over the past few years. Yeah, Litecoin has been it's kind of quietly doing its own thing, and becoming very, very successful in terms of people using it for transactions and for payments.
Yeah.
What, you mentioned you're not more so on the institutional side, Charlie. What are you most focused on and excited about these days as it pertains to Litecoin, Bitcoin in the space?
These days, for the past few years, we've been working on a solution for privacy and fungibility on Litecoin. So for a little bit of background, fungibility is the idea that it doesn't matter what coins you have. You can each Litecoin is same and equal to every other Litecoin. So this is a very important factor for money, right? If you're spending like a $20 bill, it shouldn't matter which $20 bill you put on your wallet. It should be worth exactly the same. And that's a feature that was missing originally from Bitcoin and Litecoin. Because how public the blockchain is, every coin has a transaction history behind it, and people can easily see, and they can discriminate against certain Bitcoins. For example, if you send Bitcoin from a darknet marketplace to an exchange, they might notice that and ban you because they don't want to support due to anti-money laundering laws. They don't want to support that, right? So that's not great for money. So to add fungibility, we have to add a bit of privacy to the blockchain, and that's something that we've been working on Litecoin. We launched MWeb, which is a second layer solution on top of Litecoin that lets people transact more privately and have more fungibility. So that's something that we believe is kind of the future, and we're working hard on making that as seamless as possible.
Yeah. Very, very cool. Could you just tell us more about like what's possible now? You know, we've seen with the advent of Ethereum, obviously people want to do things with their new asset class. Maybe they're not using it so much in the physical world, you know, day to day, using it as cash, but it is an instrument to, you know, use in the broader financial system. People are lending it, borrowing, exchanging, and ultimately driving yield on it. Are these all the same components that are now possible with Litecoin, with MWeb? Talk us through what are some of the components that are still to be built out?
Yeah, so like there are people building on top of Litecoin to add more decentralized finance solutions, very similar to Ethereum, and even connecting to the Ethereum network. So there's, for example, there's something called LitVM, which we're working closely with. It's a Litecoin virtual machine that enables smart contract capabilities in other Web3 applications, such as like yield, etc. And it will connect with the Ethereum virtual machine. So there are others building on top of Litecoin doing similar things. Yeah, I think we'll start to see more and more people doing that kind of stuff on Litecoin and kind of connecting to the smart contract ecosystem.
Yeah. Charlie, as we kind of come to a close here, it's kind of an off the wall question. Like, you know, Ross Ulbricht got pardoned. The entire sentiment around this space has shifted, almost like a paradigm shift in the last few months to years. You know, what is I'm just curious about your reaction from how you've seen the space evolve since you got into it in 2011 till now, 2026.
Sorry, I didn't catch the question.
Just curious about your reaction to how the space has evolved over the last recent years. Sentiment around crypto has shifted quite a bit. I remember when Ross Ulbricht got, pardoned in recent months. That was thought of as unheard of in the early days.
Yeah, so there's definitely less focus on like years ago, right? A lot of focus was on like darknet marketplaces like Silk Road, how that's like kind of the only thing that is useful, where Bitcoin is useful for, right?
Yeah.
But we're seeing that narrative change over time, where it's not just Bitcoin is not just useful for buying drugs online, right? It's actually a better form of money. It's decentralized, and it's a good store of value and good means of payments, right? And not just because it's better money, and that's why places like Silk Road uses it. And then also, it's good that there has been a lot less bad things like exchanges getting hacked over the past few years. We're starting to see more and more people pay attention to securing their exchanges and the systems to prevent hackers and scammers. So I'm glad to see less of that these days than like years before.
Yeah, me too. Totally agree. I mean, I think there's been a shift in the way that the space has evolved, and just generally kind of like how people are thinking about it in many good ways and many negative ways. Charlie, last thing for you from me. We have guys like Tim Draper predicting 250K per Bitcoin, other kind of OG Bitcoin maxis calling out for the 1 million target. Are we on track for these kind of logarithmic growth of the crypto asset space? We kind of hit about 4.4 trillion in the highs in October last year. Where do you think we go? Is 10 trillion something that happens before the end of the decade? 25 trillion, 50 trillion? How does this kind of crypto market cap eventually be realized in the space? What needs to happen? How do you think about the kind of economic nature of the space as we evolve?
Yeah. So, I mean, I've always been very, kind of very optimistic about Bitcoin, right, and about cryptocurrency. So if you look at, I mean, I always compare it to like the gold market cap, right? I see Bitcoin representing like all of crypto being very similar to gold, right? It's people call it digital gold, and for it to eventually replace gold as kind of the most trusted monetary asset class, it would become the market cap will reach gold's market cap, right? Gold's market cap right now is something like $36 trillion. So kind of that is the target. How long it will take for us to get there, nobody knows, right? But I would think within the decade or so.
Yeah.
The market cap of gold within a decade. What is that? A 5 or 6x from here?
Yeah, the gold's ran quite a bit, Charlie, and obviously silver has too, and people are kind of considering these new asset classes now with all the instability in the world as well. Actually, lied to you. One last question: how do you think about the political instability and the global kind of like entropy accelerating in the space in the world? Right? Like, how do you think, is that a good thing for digital assets in this kind of plan B? Is it a bad thing? How do you think from the investment perspective, the global instability and just accelerating randomness affects investors' perspective on crypto assets?
I think over the long run, it's good, but short term, it could be negative. We've seen people we've seen gold kind of be kind of the go-to asset class when there's instability in the world. Bitcoin has not kind of taken over that yet. So, but over time it will.
Yeah.
Charlie,
Totally agree. Charlie, thank you so much. Really appreciate you coming on the show. And
thanks for spending some time with us today.
Yeah. Always appreciate talking to a real legend such as yourself.
Yeah, of course. Thanks for having me.
Thanks, Charlie.
See you next time. Thanks.
Yep.
Alrighty, guys, we got Vivek from Etherealize coming on the show up next year. Looking forward to having him on, guys. We're gonna take a quick break, get him set up, and we'll be right back with you guys.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome to Stabled Up episode 23, powered by our friends at Frax with their FRX USD product and more stablecoin products that they've been developing for quite a while. We've got Vivek, Raman of Etherealize in the space today. Vivek, second ever guest in the nest. Welcome to the tokenization tower.
Thanks for having me. It's spectacular up here in New York. Love to be here.
Definitely.
Absolutely, man. I mean, you've been here for a while. We are coming to understand what it means to be at the center of the world, the center of finance. Like, can you just give us a sense of like your experience being here and working here, and what it takes, what it means to be working here in New York City amongst, you know, the most prominent institutions in the world?
So New York City for me has been the most inspiring city ever. It's the engine room for the financial system globally. And so there's a reason you've had me on before. I'm always pretty perma-bullish, and there's a reason. It's because when you're in New York, you see the energy, you see the talent, you see the flow of money, you see what's happening, and it's impossible not to be bullish. And now the coolest thing that's happened is the headquarters for the blockchain ecosystem is now also coming to New York. So now we're here in New York having the financial sector and the blockchain sector converging, and it's spectacular to see. I'm happy you guys are set up here, and it's always good to be in New York.
Yeah, man. Yeah. Well, Vivek, let's talk stablecoins. Let's talk the rise of tokenized assets on Ethereum. Glad to have you on. Welcome to the show. The rise of stablecoins has happened primarily on Ethereum. Both Tether, Circle, with USDC Sky has really grown. Why do you believe building a stablecoin business is best on Ethereum? Is Ethereum the best place, or where is the best place to build a stablecoin business? And how do you think about building a stablecoin business on chain?
So I think stablecoins are the first and most important product market fit for blockchains to hit mass adoption, both institutionally and with retail. And stablecoins unlock all of the use cases which tokenized assets, DeFi, everything else will follow. The reason I've been pounding the table on Ethereum for a while now, and the reason my conviction is the highest it's ever been and only increasing, is because we've seen this movie before with the internet. So we've seen iterations where every corporation had their own intranet and nothing talked to each other and nothing connected. And in the end, the entire institutional world and retail world chose the public internet to put all their information on. Now we're seeing that speed run with blockchains. So where is the safest, most secure place to put your stablecoins, to put your assets on? It's the big public, secured, decentralized global blockchain where you have the most distribution access. That's hands down Ethereum. And
you know, we're seeing this convergence play out in real time. I'm also seeing it as almost like an evolution, which tends to happen around these cycles. First, we're tokenizing a lot of these assets. We have stable coins and cash instruments. Yep. Now we're tokenizing both non-speculative in terms of treasuries, stables, but then also speculative assets with tokenized equities. After we have all of these high quality assets, both speculative and non-speculative on chain, they end up in DeFi protocols.
Exactly.
And there's two core components to this that I really want to get your take on. The first is that Ethereum is a home for DeFi. We have Ethereum has the most TVL by that metric. It's the safest, it's the most resilient by almost every metric. Ethereum is the home of DeFi. Yep. The second core component here with regards to the tokenization of high quality assets is BlackRock, one of the leaders in the ETF business, has talked about tokenizing every single one of their ETFs in the next 3 to 12 months. Cannot stress this enough. We had Matt from Bitwise say this is a foregone conclusion when these institutions are talking about a timeline of months. These things are actually happening. It's not an announcement of announcement, some thing that might happen later on. Yeah. So when BlackRock tokenizes all of their ETF stack, not just their crypto ETFs, but every single one, and they're talking about, one blockchain to rule them all. Larry Fink is very, he's kind of toting this idea, and Ethereum is the home of DeFi. Like these three things orbiting around each other. Can you just help put together once these three pieces do converge, what does this picture truly look like?
it looks like the internet moment for the financial sector, all converging to Ethereum. I mean, it's impossible not to be bullish now. Obviously, prices are down. I'm not going to sugarcoat that. But crypto has this bad habit of linking prices to performance of networks. The network has never been stronger, has never been more resilient, has never been more future-proof to scale, having layer 2s plugged in and ready for the institutional moment than right now.
Yep.
Asset price will follow. I mean, that's a foregone thing, and that's just a matter of when, not if. But coming back to what does this mean? Larry Fink is a pioneer in the space. He's been a visionary, and his voice is heard and listened to by everyone else on Wall Street that's outside of this window. So the banks look at it, the asset managers looking at it. He's one of the leaders that's digital assets forward. And when he tokenized BUIDL, their money market fund on Ethereum, before there was regulatory clarity, before Gensler, before we got out of the Gensler SEC, that set the standard for Ethereum to be the default. Ever since then, the amount of money market funds on Ethereum has multiplied. The amount of stable coins on Ethereum is multiplied. And now Larry Fink coming and saying, okay, we need one common blockchain so we don't have fragmentation, so all tokenized assets can be in one place. That means Ethereum, it's the best setup for it. And that means we're gonna see the real power of interoperability of the application layer, of the DeFi systems. Like you said, they're not just the safest and most secure, they've been battle tested. So there is the most amount of precedent. So institutions will go where there's the most amount of precedent. I have no doubt that's Ethereum. And we're about to see a renaissance really, really soon.
Okay, so Vivek, let me push back on the value side of this, because I think I totally agree, and the audience will totally agree that on the actual where Ethereum and where the stablecoins are going to live are going to be on Ethereum. They will be on Ethereum. All the tokenized assets there'll be a lot of transaction volume. There'll be a lot of TVL and DeFi. Obviously, Ethereum has the burn, which captures a lot of gas fees. For better or for worse, the L1's gas fees are the lowest they've been in years, which from a user's perspective, it's great. It's
great.
like everyone's happy about it, right? But from a burn perspective, it doesn't help the tokenomics of Ethereum. I think there's a bit of hole in the current Ethereum thesis that just because we get all the stable coins and all the tokenized assets onto Ethereum, that's going to lead to a higher ETH price. I'm sure you've heard this before. This is not your first time, but help me debunk this. Why is this thesis true? Like, how is this actually going to happen? Talk to us about what that looks like to capture that value, rather than just kind of like this mimetic, we have all the stable coins, we have all the tokenized assets, we're the best.
Okay, so I'm not going to give you a mimetic answer. I'll give you two answers that I think are very important and very institutional focused. First off, Bitcoin has become an institutional holding. There will not just be one institutional asset that's allocated to in the digital asset space. ETH is the other one. So we're already seeing it. Harvard had allocation to the Bitcoin ETF, and they actually sold some to rotate into ETH ETF. That's separate from, I'm not linking it to activity. I'm not linking it to the growth of stablecoins. I think all of those are very good for Ethereum, obviously. But ETH is going to be a core holding. And if you think of store of values in the space, there's one that's proof of work, that's digital gold, that's Bitcoin, and that's great. And there's one that's proof of stake with the yield, that's also a core portfolio holding. Institutional allocations increasing to ETH the asset, which is inevitable as Ethereum grows. That's the driver for price. That's the new buy interest. Tom Lee's one, ETFs are another, just being a portfolio allocation. So that's one. That's how ETH price grows, by becoming the next store of value, not tied to the network. I'm just speaking independently. The second, and I think this thesis hasn't landed for a while, but it's going to. If we think, as we've discussed here, that most tokenized assets that are high value are going to be on Ethereum, most stablecoins are going to be on Ethereum. Tokenized assets and stablecoins are all rooted to real world trust assumptions. So every single asset has some sort of off-chain record. So there's a point of trust for every tokenized asset. As tokenized assets on Ethereum grow, there's only one asset that's global, that's trustless, that can be used to move between these trusted assets. So if you think about collateral, if you think about the global ecosystem all coordinating, and the financial sector all choosing, this is the medium of exchange that we're going to trade through, ETH is the only asset that is not linked to something off-chain. That's really, really valuable. If you think in the future, if everything's going to be tokenized, you need a neutral asset where the US can trade with Singapore, let's think really, really big. ETH is that asset. That again, it's early for that, but as that happens, ETH reprices to become a multi-trillion-dollar asset because it's trustless collateral that no one can censor. That's worth a lot for the financial sector.
Vivek, I gotta say, man, those are both semi-mimetic answers. Like, how is ETH the asset going to accrue the value from stablecoins, from payments, from tokenization? Right now, we have the burn. I know Vitalik's working on other things, and the EF has had this very, very big change. But people are wondering, like, I'm holding ETH, I'm staking it. What is going to drive this direct value accrual from all of this transaction activity, all these institutions? Is there a direct driver, or should we just stop thinking about it that way and just open our minds to this more kind of, okay, there's going to be an institutional driven bid, there's going to be this neutral asset, and this is enough to basically create a store of value asset over the long term?
I think, again, I don't want to sugarcoat the fact that we're not tying the value of ETH to transactions. I think that's a mistake, and that suppresses the potential of ETH, the asset. The trustless collateral for the global economy, multi-trillion-dollar store of value asset, like gold. Gold is mimetic. Bitcoin, honestly, is mimetic too. So ETH belongs in that camp. That being said, let's come back to your question. When the world's transactions, the world's tokenized assets, the world's stablecoins are all on ETH and its layer 2s, transaction fees, no one's onboarded yet. No one's using the chain yet. It's all going to come. The institutions are telling you it's all going to come. Yeah, transaction fees are going to go up a lot. The yield's going to go up a lot. So it will drive value at scale. If you think about Ethereum right now is in its Amazon moment, where it's onboarding customers, where it's very cheap to use and it's safe to use and it's the most neutral platform, that's the best customer onboarding pitch that you can possibly give. Once customers are here, fees are going to be higher, revenue is going to be higher, and it will solve itself. But what I'm trying to do is separate from the fact that, of course, I think activity is going to go up. Of course, I think fees are going to go up. Of course, I think the burn's going to go up and the yield's going to go up. But separate from all of that, I'm trying to separate the conversation and say ETH belongs in the category as Bitcoin and gold.
Yeah. How much consumer behavior needs to change in order to accomplish this vision? Right now, so many users are currently interacting with Bitcoin and Ethereum through centralized exchanges. When we have tokenized digital assets and stable coins, will people be using the chain directly, or will we just be batching up a lot of consumer activity and then making rather small changes to the underlying ledger?
I think that Ethereum and its layer 2s have hit the amount of scale where they can support consumer activities, and that's only going to grow with the really inspiring Ethereum roadmap to ZKify the base layer, to have ZK VM built in, to bring the magic of mathematics and cryptography to finance. So the real benefit comes from using the chain. I think that there's been a stopgap because of lack of infrastructure and lack of technological improvement to actually use the chain to its fullest potential. The ironic part is, Danny, my co-founder, said this, is we found that the biggest customers of decentralization and the biggest customers of the chain are ironically the institutions and not retail, because retail is used to being behind guardrails. As institutions unlock the potential of what the chain can accomplish, individuals will too. That's the best thing, is Ethereum scales like software. Someone like a JP Morgan can use Ethereum, someone that lives in a remote country can use Ethereum, and they can have equal access, and that's powerful. That's the end potential. It will not be a centralized, intermediate guarded future. That's a dystopian future, and Ethereum's potential is way bigger.
I love that we're just going through all the mental models right now and all of the narratives and all of the calculations and, you know, everything that you read on Twitter or in blogs or here on podcasts. I'll just throw another one at you. We are here in Manhattan in the Empire State Building. There was once an idea that blockchains were like cities, right? That there were different kind of jurisdictional requirements for different blockchain execution environments. At a certain point, Ethereum was interrelated to the Manhattan of the blockchain design, right? It was for the people who are working in this space, large capital managers, allocators. The fees were more expensive than other kind of cheaper, faster chains.
This is all the L1. Right.
Right.
And there's roll-ups that may be like different economic zones around Manhattan.
Yeah.
Right. And so now we've kind of gone through the roll-up centric roadmap for several years, kind of activities coming back to the L1 in a stronger way. Still a lot of activity on L2s. Is this Manhattan NYC kind of analogy, is that correct? Is Ethereum kind of like, is the block space akin to the Manhattan lifestyle, culture, way of living. How do you kind of think about these blockchains as cities idea now?
I still love it. I
Okay.
love analogies.
You're a New York bull.
And I'm a New York bull. I like, what does New York do is it attracts innovation, it attracts hunger, it attracts a lot of very, very positive, bullish thinking about the future. And then we export those ideas to the world. The world operates on the US financial infrastructure. And if the US wants to keep that lead, which it will, it has to export stablecoins, it has to adopt blockchain infrastructure. That's happening at the fastest pace I've ever seen. And it's not just governmental, it's institutional too. So once again, Ethereum as being the New York is going to be able to export its culture of being neutral, of being decentralized. Ethereum didn't pick political sides. Ethereum didn't become biased. Ethereum kept its values this whole time. It's still the most decentralized. It's still the most, and it's still scaling to be the biggest blockchain with the ZK future. It still has the L2-centric roadmap that institutions can plug into, which are flourishing. I think the Robinhood chain this year is going to be a spectacular success. So everything's hitting. And it's just like in New York, everything hits, and people always love to call for the death of New York. And guess what? New York's the best it's ever been, and Ethereum is also the best it's ever been.
Yeah, you know, you mentioned how the exports of the city, the exports of Ethereum, everything is starting to hit. We've also talked about the exports of crypto. We've also said how crypto, as we know it, is effectively dead. Crypto tends to refer to the altcoin complex, which we believe is, you know, primarily cooked. It's a lot of the infrastructure with no product market fit, but the exports of crypto, the stable coins, the blockchain itself, these, you know, digital assets, tokenization, these things are very much alive. And so I'm curious if you tend to agree with this, and if so, what are the exports of our industry that institutions primarily resonate with? Is it the composability? Is it the liquidity effects? Is it lowering settlement times? What are the primary exports of our industry that resonate with institutions?
I think the simplest way to put it is Ethereum brings new revenue upside and it brings a lot of cost cuts. And there is no company in the entire world that doesn't want to do that. And it's very similar to AI. Everyone needs to adopt AI ASAP because it increases new revenue lines and it cuts a lot of costs. Now throw in the money layer, which is Ethereum, and that coupled with AI means we're going to reshape how every single business exists. Every business is going to need to, and already has an AI strategy. Every business is building an Ethereum strategy. And so what does that bring? Our exports are new innovation, our exports are gonna be new jobs, our exports are gonna be new types of products. And beneath the hood of all that are things like lower settlement times and fewer trust assumptions and using math instead of using manual spreadsheets. And we know, I go through the list every day of operational processes that everyone around us in New York has to go through at the banks and asset managers. And Ethereum actually upgrades all of that. So it's a very positive sum technology. But I will say the other thing we're exporting, and this is why I want to come back to, I agree with your take that most altcoins they've sucked liquidity out of the system, and that's why we've been in a bear market for coins, even though we've been in the biggest bull market ever secularly for blockchains, and that's going to keep continuing. But one of the exports from Ethereum is ETH the asset. Just like Bitcoin exports Bitcoin the asset as a store of value. Coming back to it, we need to decouple ETH the asset. It's an excellent application. Vitalik actually called it one of the most important applications for Ethereum. That is the store of value that we're going to export as a portfolio asset, and all of the operational efficiencies and revenue that Ethereum unlocks. And we're seeing that right now. So that's already here.
Can you run down like maybe a top 3 or top 5? Like you mentioned, you're looking at the bank processes. I think people are hearing this. We've been talking a lot about this. You increase revenues, you lower your expenses. That's what every company wants in their bottom line. What are some of those processes that banks and asset managers are going through on a day-to-day basis that they can make more efficient using blockchain and Ethereum?
Excel gets replaced, which is a very, very big thing because Excel is the global database. But
This guy's got his Claude bot going on.
Excels don't talk to each other. I mean, having your data in one place, having your money and your assets in one place is the biggest unlock because people don't need it. It reduces time from reconciling Excels. It sounds like a very small problem, but it actually causes errors. It causes a lot of money movement of fat fingers. And that gets all reconciled with one real-time database, which is trustable and can hold valuable assets. And that's the important part is you need to be able to trust a system with high value assets. Right now it was Excel because people trust it within their walled gardens. Ethereum is the platform that actually can hold all this. So that's one. The second, payments. I mean, people still send wires. It's mind-boggling, and that's the first thing. That's the first shoe to drop, and that's why you're seeing every bank is either registering their own stablecoin, working on consortium stablecoins, working on the stablecoin strategy. That's very, very obvious. That's such an easy improvement. And the last thing is digitizing actual assets. So I mean, everyone's not tokenizing stocks. That's excellent. Stocks are already quite efficient, but now they can become 24/7. Now they become digital. Now a lot of the manual things that the DTC has to keep doing manually become automated. And so yeah, the DTC and NASDAQ and ICE, they're all working on tokenizing their stocks. And what is that going to do? That's going to cut their costs. That's going to cut their operational overhead, their back office. And it's going to increase revenue because they can start making their own DeFi protocols. They can start to say, you know what, let's distribute stocks on AMMs and in lending protocols. And that's going to be revenue drivers. So again, the tools are all here and everything's ready. And now we're going to hit the adoption inflection point.
Yeah. Yeah. I'd like to ask you what that looks like from kind of like an investor's perspective, from a valuation perspective, thinking about the DeFi protocols and their respective assets. They have tons of different models with regards to buybacks, revenues, burns, et cetera. But right now, I think the entire industry is thinking about running valuation kind of like thought processes on DeFi assets as they are now with crypto only capital, digital asset capital only. So like Bitcoin or wrap Bitcoin, ETH, stables, you know, like the Aave, Chainlink, et cetera, right? Those are the assets that are in Aave, in Morpho, in Sky, in all of these kind of asset managers on chains, lending protocols, et cetera. What does the change in valuation methodology look like? And talk to us about the TAM opening when it's not just crypto assets on chains, when it's not just digital assets, but it's any and all tokenized assets. I think you've said you expect stablecoins at 750 billion on chain, as well as tokenized treasuries upwards of 50 billion as well. These are your words, not mine. I'm more bullish than you here, but I guess we're adjusting the,
I think we're low. Yeah, I'm higher than that, but keep going.
Okay. So when those come on chain, what does that look like for not ETH asset and not Ethereum, but these DeFi assets? How do you think about their transformation?
I'm max bullish Aave and Morpho and Uniswap. This is their renaissance. I mean, they've been battle tested. And when I say Ethereum's the best place for business, that means for the DeFi applications too. I'm not just saying that Wall Street comes in. Everything that's been built and battle tested. I mean, all these founders have been in the trenches, like Stani and Hayden and everything, and they've been building the most battle tested protocols on Ethereum. They're about to see the biggest revenue uplift they've ever had because the TAM, like you said, I think I'm higher. I think stablecoin AUM is going to 5x on Ethereum. I think tokenized assets are going to 5x. And so these are going to be hundreds of billions, if not trillions of assets that are going to come to the chain. And they're going to plug into things like Aave and Morpho.
Yeah, we've already seen Apollo, BlackRock, right? They've already done it.
I mean, BlackRock put Biddle on Uniswap. Apollo is working with Morpho. These are already happening. So these DeFi valuations are going to go bonkers. And that's a good thing. I mean, it just means that now by having more assets and more ways to create utility and show the use cases of blockchains. DeFi got me into the system. DeFi got me into Ethereum, and now is DeFi's inflection point. So I'm quite bullish DeFi.
Totally, man. And same here, right? Like we started in 2020. It was DeFi summer, and DeFi was very, very, very interesting, very, very novel, very unique, very kind of Wild West. Went through like a 2 to 3 year phase where it was kind of usurped by the L1 trade or the L2 trade. And now it feels like it's right back. So I guess maybe a more difficult question here is there a world where their DeFi protocol tokens can outpace the valuation of the underlying blockchain? Perhaps not Ethereum, but other blockchains. Do you expect to see a valuation mismatch change where there's going to be the apps of the ecosystem rising above the underlying infra and L1s? I know that's kind of like the hot thing to say right now, but like realistically, like is there a world where the Aaves, Morphos, Skies, Syrups, et cetera, rise to higher valuations than the all L1s or L2s?
Absolutely. I don't even think it's a controversial statement. I think that's the most positive sum outcome is where the applications where you're seeing institutional adoption and hundreds of billions, if not trillions of assets at the end of the day flowing through, they should capture a lot of value. And the app layer is really important. a blockchain is nothing without its applications. A blockchain is nothing without its assets, and a blockchain is nothing without its security and decentralization. And so, yeah, obviously, I think Ethereum benefits from all of this. And again, Ethereum is bigger than just a platform. It's infrastructure, and ETH is an asset store of value. So let's move that aside. But every single one of these DeFi tokens, now that they're hitting their institutional moment too. I mean, again, Stani went through the trenches, and the SEC came knocking on his door. SEC came knocking on Uniswap's door. All of that is now behind us. Yeah, these DeFi tokens, I think, are set up for re-rating in a very, very large way, and they're going to capture huge market share. And I'm glad that we have so many applications and so much precedent built on Ethereum. It's good for ETH, but the app layer should flourish. The app layer should fly, and it should outperform anything else that doesn't have as much product market fit and utility as DeFi has today.
What do you think Ethereum can be doing better?
Great question.
There we go.
Yeah. You'd stump me for one, because it's been a lot of years of it's been a tough few years for ETH the asset, and people love to look at Ethereum as the dinosaur, and now Ethereum's value is finally showing itself. So it's one of those moments I'm like, is this finally the inflection point to be like max bullish? But what could it be doing better? Continuing to be top of mind share for new young developers, continuing to say that this is the coolest place to build. I focus a lot on finance and financial applications. I've been in New York 15 years. I worked on Wall Street for 12. So, I mean, I know the product market fit when I see it there, and it's very exciting to me. But Ethereum is bigger than just finance. So the AI ecosystem, Ethereum needs to win that. I mean, that's a must win, and Ethereum is the most useful platform to have money and high value assets in. So when you ask all the agents where you're going to transact, they actually say they all output Ethereum. We need to keep it that way. People building new applications, that needs to come to Ethereum. Ethereum it needs to be cool rather than boring. It can't be branded like IBM. It's branded like Apple. So that's what it can do better, and we're all going to help drive it. But it's important. It's important to keep inspiring new talent, and I want innovation. When people think of innovation, I want them to think of AI, and I want them to think of Ethereum.
Yeah. Something that you spoke about earlier was Tom Lee and Bitmine being this kind of like institutional buyer, like looking holistically at the DAT landscape. You've really got Saylor, Tom Lee, and the rest. Obviously, SharpLink, Joe doing great work. Those guys are crushing. There's a couple other solid ETH DATs, but there's been some stuff happen. ETHZilla, Peter Thiel left, and it was kind of weird. There was a Bitcoin guy, Joseph Bailey, I think, did some interesting cross-entity absorption. I just don't know where this goes. What's your honest opinion on Bitmine and how the stock trades, how the company's being ran? Where does this go for all the ETH holders who are constantly seeing Tom Lee out there buying? Like, is this our Saylor? Is this something that we should be fully backing, publicly being strong about, careful about? What's your take on the DAT landscape?
Yeah, so the power law played out. Just like any innovative wave, you see a huge wave and there's a mania, and then there's a quick reckoning, and there's a few that rise to the top. And that played out very, very quickly for the DATs, but that's also, it's healthy. It's healthy to have a reset and have sustainable growth. Tom Lee has been buying $100 million of ETH for several weeks, for a long time. He is the Saylor equivalent, and he has an excellent voice, and he knows the value proposition, and he's a champion for ETH. And I think we should all be behind him because he knows the value. He knows where this is going, and he thinks in exponentials. He's the one that says this must be the stablecoin chain, so maybe I should buy. Like that's what you needed. There's a lot of other good firepower in the space, so like Lubin and SharpLink and Andrew Keys is going to go live soon. So I mean, these are heavyweights. These are OGs, and what they're going to do is they're going to help amplify the value of ETH to institutions, and that's why I think ETH is going to become a core holding for institutions. That's why, going back to your question, it's never evading a question. The value is going to grow on Ethereum a lot. Transactions are going to go up a lot, but ETH is re-rating to become an institutional asset, and a lot of that's because of Tom Lee and the other DATs. But yeah, it's going to be a few of ETH people, and it's Saylor for Bitcoin, and that's excellent.
So one thing that Rob says a lot and that we think about is that have these DATs not just created a dilutive force on the market such that if I want to get exposure to ETH, I can buy SBET, Bitmine, the ETH, any of the ETH ETFs. I can go on Kraken, Coinbase, etc., buy ETH there, or I can go on Uniswap on chain and actually buy on chain. How do you think about whether these DATs are dilutive to the buying pressure from retail on ETH? Is it a dilution, or is it all kind of the same at the end of the day, such that like there's more than 120 million ETH or whatever it is, or there's more than 21 Bitcoin because there's all these like derivatives that you can buy? Is that a right way to think about it, or is that just wrong?
I don't think so, because all of it leads back to buying spot ETH. So I mean, buying Bitmine just means that buying Bitmine stock means they're gonna go have more MNAV to go buy more ETH with. So
Yeah.
it just depends on the vehicle, and this goes back to your earlier question. The people that will value ETH natively on chain, ironically, are the biggest customers of decentralization. It's the institutions. It's where can they hold assets in a trustless manner that can't be censored, which is their own collateral. That's ETH. Retail wants wrappers. Retail wants different ways of accessing. And the good part is the Ethereum ecosystem is given every single menu. Like you said, you can buy ETH on Uniswap natively. Great.
Yep.
Maybe that ends up being the institutional case. If retail wants to own ETH in their 401k, fine. Then do ETH, the BlackRock ETF, or do Bitmine and get some levered exposure to ETH. But no, all of this is accretive. I'm very positive. So I don't think it's diluted at all. I think it creates more buying pressure, more buying sources, and I think it's ultimately very good.
What are the 2 or 3 things that you're most excited about within the Ethereum ecosystem this year? Clarity Act comes to mind. There's tokenization. Like I mentioned, BlackRock wants to tokenize all of their ETFs this year. Is there like 1 or 2 things that really pique your interest?
Yeah, it was cool. It was last summer about this time last summer. I was testifying in Congress about the Clarity Act,
Yes.
and now it's coming to fruition. So that'll be excellent for unleashing innovation beyond. Like I want Ethereum to win, but I want all the applications on Ethereum. I want all the tokens on Ethereum to win too, and that will give clarity, for lack of a better term, about how those tokens can be treated. The good part is the CFTC is getting very vocal about how to classify tokens. The SEC has been super supportive. So we're going to see a lot of innovation anyway, but Clarity Act will put it into law. So it's very, very important. Just like stablecoin, the Genius Act legitimized stablecoins, and now a year later, we're going to see the inflection point. The Clarity Act will unleash tokenization, and you can't put that genie back in the bottle. And so it is important to get these things into law. That's the first thing. And the second thing is, I'm just excited for us to see our exponential inflection point, which people have been waiting for a very long time. It's been a tough few years of waiting for adoption. Like we all been driving towards is here. So I'm waiting for stablecoin TVL to be $1 trillion plus. I'm waiting for RWA TVL to be $1 trillion plus, and that's when we find product market fit. And yeah, I'm just excited that after all this time. People thought I was crazy for a while, but I'm excited that I think Ethereum is going to be the backbone of the financial system, and that's going to get solidified this year.
On Clarity, Andy and I are going to the DC Blockchain Summit next week.
Nice.
We're going to be live streaming from the conference, speaking to a bunch of senators and politicians, and we've had Hester Peirce on the show.
I saw.
Hope to see her, out there again. We'll have some CFTC people on as well. Like, are there questions? What questions should we be asking? Like, what do you want to hear? Right? Like, if you're not going to DC, like, what do you think the industry needs to know or should be talking more about? We'll be there to ask those questions.
I think we have the most open, but also the most responsible regulatory window that we've ever had, and maybe we'll have for a while. So I think now we're supposed to push as much responsible innovation, but be on the frontier as much as possible. What does that mean? Let's ask them what is helpful to innovate in America. One example is privacy. So I believe very firmly that blockchain systems at the base layer have to be open, just like the internet's open, but you can build privacy layers on top. What does the SEC, FTC think about ZK? We talked to them about it a lot. They're excited, TLDR. But how do we incorporate? How do we be on the frontier of ZK? How do we not lose the technological race and let ZK go elsewhere before we embrace it? What kind of systems can we adopt for identity, for privacy, for data privacy, et cetera, and linking all that to blockchain? So the frontier of ZK, Ethereum has always led on that. Ethereum's been but we should continue to push the boundaries on it. And the second thing is, how do we responsibly integrate all these institutional assets that we're bringing and have them be distributable to retail? Like the real potential of blockchains, it would be a little sad if it just ended up being institution to institution. There was no open benefit. Then what's the point of Ethereum at the end of the day? We want to responsibly be able to take assets that only Wall Street's had access to and give Main Street access to those too in the right responsible way with the right disclosures, but make it all programmatic. So how can we think about innovating in that future? That's I think the win that everyone wants to see. Everyone wants more distribution. Everyone wants more asset velocity. Blockchains enable that. Let's work with regulators and figure out the right rules for it and bring the right technology. And I think, again, ZK and privacy should be a big part of that conversation.
Definitely.
Incredible.
Yeah, I mean, I think everyone's excited about the ZK aspect of the Ethereum roadmap. It feels like this technology has been so aggressively invested into, built out, and it's kind of adjacent to blockchain and crypto as as it exists. But it's so perfectly tied in, right? It's such a nice kind of holy matrimony there. More on the kind of regulatory clarity front. I'm viewing clarity as like this line in the sand in this current bear market, as well as in the current structure of regulation. People are saying that we really want to get this done before the midterms. And obviously we want to have firm regulation done prior to the next actual election of the president. There was a big standoff, though, between Brian Armstrong and the broader regulatory, House of Representatives, SEC, CFTC. And it seemed like he stood his ground because he did not want to budge on the stablecoin yield part of the of the bill, which was probably because of his private interest, but also because you want to think because of the public interest of the entire industry. There was a lot of controversy there. Bitcoin went to 97K at that point and then dropped all the way down to 66 once the market realized that this wasn't going to happen. What's your take on Brian Armstrong's position in DC? How much of an influence do you think he really has? And does he have too much power?
So first off, I don't think Bitcoin's crash was due to the Clarity Act not passing. I think we're just in a weird macro liquidity spot, which is all going to resolve soon for the next cycle.
Soon.
So no, it is soon because the money printer there's always a money printer. That's like one of the things that will always be true in monetary policies. There's always going to be a money printer, and that's gonna come to life soon. I mean, it's so take that aside, take the price aside. I think Brian Armstrong and Coinbase have been some of the most important proponents of driving responsible regulation and innovation for crypto for the last 10, 15 years. I think we all owe him a lot. And I think he is thinking bigger than just Coinbase. I think he's thinking about the future of the space. So I think everything Coinbase was the lone party fighting the Gensler SEC, and they're the only ones that stepped up and fought back, and we all owe them for that. So I don't want to comment on whether Coinbase and Brian's stance is right or wrong. I think they're all going for the most positive sum outcome. I think the point to hammer home is the Clarity Act's important. The Clarity Act encodes into law how tokens are treated, but stablecoins are already in law. And what does stablecoins being in law do? It makes public blockchains put into law. So we're in a good spot. I mean, I don't want to say that if the Clarity Act doesn't pass, it's all roses, but we're going to be fine. I don't think you can put stablecoins back in the box. Too many institutions, every fintech company, everyone's integrating them. That it's like undoing email. Like no one's going to go from email back to sending paper mail. No one's going to go from stablecoins back to physical wires. That adoption moment's happening. It'd be nice to have Clarity Act to pour fuel on the fire for more types of DeFi tokens, but tokenization's happening regardless. Stablecoins are happening regardless. Public blockchain adoption's happening regardless. Ethereum's now irreversible, and I'm quite happy about that.
Love it. Yeah. Last thing from my side, on the Etherealize side, what's the state of affairs now? What are you guys doing? What's the conversations look like? How has the kind of pendulum been swinging from your internal operations from, ETH was at 5K, now it's at 2K. The adoption is flying. There's been a lot of developments on the tech side. Like, how do those conversations look? And kind of what's the state of affairs on institutional interest in public blockchains, in Ethereum, and what are you doing to kind of push this forward?
Right. We're the busiest we've ever been. It's the most intense, in the good way, period we've ever had. It's the most amount of inbounds. I used to have to make outbounds about Ethereum. Now it's all inbounds saying, we need this, teach us about this. It goes from things like presenting Ethereum to a bunch of Hong Kong regulators to following up on the regulatory front in the US to doing institutional tours all around Wall Street all day and running around in this suit. So you guys are wearing suits too. It's the best it's ever been. And so Honestly, I haven't noticed the price drop from 5K to 2K for institutional adoption. I've obviously felt it in my wallet, but I think that'll come back. I think I have the most conviction I've ever had, but it's because we see all the data points, we see what's happening, and we've been building. There's so much infrastructure that needs to be built. The ZK frontier, we're making a big bet that that's the future of privacy. I think that there are other chains that are choosing not to use ZK, and we're choosing that Ethereum's going to be all ZK enabled, and it's like betting against AI. Do you really want to bet against ZK?
Yep.
So we're making some big bets. We're making some big technological pushes, but we're building the infrastructure to help accelerate. I want more tokenized assets on Ethereum. I want more stablecoins on Ethereum. We're gonna, whatever doesn't exist, we'll build it, and we have the most amount of adoption we've ever seen.
Incredible. Vivek, thanks so much for coming on, man. Absolute pleasure. We got a can of bear spray here
Yeah,
for
I
all
think
the
you'd like
Ethereum
this.
bears.
I think you'll love that one.
Any Ethereum bears, we have this when they enter the office.
That's amazing. I don't think we need this in New York.
No, I think you're right.
There's no
I think
No bears here.
No bears here.
That's incredible. No, thank you for having me. I love this new office. I'm so happy you're in New York and the capital of the world and the capital of Ethereum shortly.
Absolutely,
Yeah,
man. Well, thanks so much. This is
Ladies
it.
and gentlemen, that wraps us up.
That
for
wraps up
today.
Rollup TV.
Stabled Up, episode number 23, guys. Thank you for tuning in. See you guys tomorrow live from the Tokenization Tower.
The
and
Empire
Nest.
State Building. See you
Thanks,
guys.